Right, guys, as we head deeper into the US session, let's just quickly take a look at where we are leaning from a risk sentiment point of view. Sentiment is leaning more risk off as we get deeper into the session. Equities, as we can see here at the top left, equity futures have been trading lower. North American equity futures, EMEA, Asia Pacific has all been lagging. The recent downside, of course, has been driven by that upside surprise. Let's just quickly go to the calendar. By that upside surprise that we had in the US Employment Cost Index, the quarterly number for Q1. This number beat expectations by quite a bit. I mean, printing above the market's maximum expectation of 1.1, printing at 1.2. Now, even though equities were lower on the back of this, as you guys know, we didn't want to trade them lower today on a beat in the data if we got one, purely because we have such a massive gauntlet of other risk events to navigate in the next 24 hours. I mean, firstly, let's quickly take a look at this one over here. We've got obviously earnings with Amazon coming up after market. Even though I don't trade these single stock names, as you guys know, I do trade the indexes. And given the massive weighting, let's just quickly take a look at that weighting one more time. I know we've looked at this quite a lot already, but it's always just important to watch this. If you take a look at the weighting of a company like Amazon, 4% in the S&P, close to 8% when it comes to the NASDAQ. We can't afford not to keep these names on the radar. So massive one coming up a little bit after market. And secondly, if you take a look at tomorrow's schedule, you know, tomorrow is a big one from a data and risk event perspective. We've got very important data in the form of the ISM manufacturing PMI coming up. We also have JOLTS data coming up. Now, these two will be especially important after the recent softer prints we saw from the likes of the S&P Global Flash PMI. So if you take a look at the, what the S&P had to say about that, take a look at this data. They saw that the employment decreased for the first time since 2020. Now, this is also important here. The overall reduction in workforce numbers was centered on services, obviously the biggest share of the economy, where employment decreased solidly at the largest extent since mid-2020. In fact, excluding the opening wave of COVID, the decline in services staffing levels in April was the most pronounced since the end of since the end of 2009. So that's why the ISM will be important tomorrow. More specifically, that employment sub-index number will be very important going into NFP, and of course JOLTS data. So very important for us to watch that. The data has been weak. There's been other measures as well, which is putting the markets a bit on edge when it comes to labor data. If you take a look at something like the NFIB hiring plans that we had a couple of, when was it, last week coming out, also a huge drop to the downside, lowest numbers going back to COVID years as well. So there's a lot of focus right now on the employment numbers, which means ISM employment index as well as the JOLTS data. It will be important for the markets tomorrow. And then, of course, after that, we've got FOMC to deal with. So right now, the bottom line is patience is really preferred when it comes to equities. My view on equities remains unchanged, but the time to trade them isn't today. I would want to have that gauntlet out of the way and obviously watching out for Amazon first as a potential trigger. Now, in terms of the bond market, we did see bonds lower, obviously yields higher on the back of that employment data as well, as you would expect. But also, this is a market we need to be careful of about going into tomorrow's big lineup. We had the quarterly refinancing announcement estimates released yesterday. That really failed to drive any meaningful market reaction as we anticipated. So again, the focus for now is on tomorrow's lineup with the data and of course the FOMC. When it comes to commodity markets, there's a couple of things here just to take note of. That downside deceleration we saw earlier during the European session, that has really just accelerated. Silver down big time, gold is down, WTI is down, platinum is struggling, and nat gas is lower. Now this one is one we need to watch copper, because copper has been on this massive outperformance streak over the course of the last few weeks, and it's just starting to look a little bit shakier around the highs. We've looked at things like positioning. That's the FX data. Let me just quickly grab the commodity positioning data here for a second. Just give me a second, guys. If we look at copper, let's just quickly go to the copper chart. Again, we never, as you guys know, take trades purely based on positioning, but it's always worth our while knowing how stretched the markets have become. And take a look at this chart. I mean, we had some levels here where we really need to start paying attention to copper positioning. The reason why that matters to us is obviously how this could impact things like the Aussie dollar. You know, the Aussie dollar always very sensitive when it comes to moves in copper. And, you know, it's not just because of copper, but copper was one of the reasons, you know, why we decided to trim our Aussie Swiss franc long that we were running from a couple of weeks ago. Decided to get out of that. We got lucky to get out very close to the highs, and we are happy to be out of that market right now. I do still think, as you guys know, that the Aussie is a little bit underpriced for what the rates markets have priced in for the RBA. You know, I do think there's more upside potential looking at the fact that it's just the RBA and the Bank of Japan, where the markets are expecting possible tightening from this year. So I do think there's more upside, but right now is not the time for that trade. Right now is the time to be a little bit more patient. So with that in mind, let's quickly then take a look at the broader FX market. The US dollar obviously leading the pack to the upside here after that employment data. And we can clearly see that risk off mood here with the Aussie and the Kiwi lower. Just keep in mind that move in commodity markets, a big trigger here for this downside in the Antipodean currencies. The other one that's been a good mover here today has been the euro, which is the second strongest currency in the session. And that came on the back, of course, of some pretty solid data we had out of the Eurozone. I mean, take a look at some of these datas. These data points. Upside surprise above the market's maximum expectation for French GDP, for German retail sales, for French CPI, for Spanish GDP. You know, we've been talking about that green shoots we've been noticing in the Eurozone for the past few weeks now. And it finally looks like that is starting to make its way into more of the data. So, you know, as you guys know, we spoke about this earlier, but we jumped into a long in euro sterling. Nothing sexy, not very heavy on the risk. But, you know, looking at things like, if you look at the market internals, they do all still suggest that there is upside risk, especially if you look at something like real yield differentials. Keep in mind, though, that these differentials, they haven't really mattered for the pair for the past few weeks now. So take it with a pinch of salt. Again, you don't base a trade purely based on this. You need more info. But after that data, I think it justifies a try higher here in euro sterling, especially from those levels. The pair just looks massively undervalued. So we'll see how that plays out. So in terms of the schedule then, keep that Amazon earnings in mind coming up after market. That is going to be a big driver. Obviously I have things like AMD as well, so it's going to be a big one. And then also for the Kiwi traders out there, keep in mind a little bit later, coming up at 11:45. Remember, this time is SAST, but 11:45 we've got Kiwi jobs data coming up. I have posted a preview for this, so do make sure to watch it. I do think there's some potential opportunities there, so make sure to just check that out to see where we think the low-hanging fruit comes in for that data point. So good luck out there. As always, any questions, don't hesitate to let me know.